David Moore, IRA Advantage. It is August 7th, 2025, and I just wanted to sort of talk to you real quickly about IRAs and 401k plans, IRAs and LLCs, 401k plans, and C Corps, I guess. And the reason I want to talk about that is people, the rules for retirement accounts haven't changed since they became a thing in the mid-70s, let's say. So self-directed retirement accounts, very well-kept secret. You've heard me say that before, but what I want to sort of tackle at this moment is a transaction that's just come to us last night. So we have a situation where I got reached out to by a financial advisor. He's got a client that wants to buy a business. And so they want to organize a call. And so basically they said, hey, I want to take a retirement account and go buy the business. What do I need to know? What do I need to know in my capacity? And we don't sell investments or give investment advice. We're going to create the investment vehicle that allows people to get where they want to go. So in this transaction, my first question is, does this person that wants to make this investment in this company, do they want to just buy the company and then have it as an investment, or do they want to buy the company and actually work in it? Both of those things can be accomplished, but it's going to be two totally different tracks. So if we're just looking at making an investment in a business, we will typically just create a self-directed retirement account that allows that investment to be made. And we have two choices. We have a basic account, which means that we're going to move the money necessary from custodian A to custodian B, and then direct the custodian to make the investment into that business. And that's fine for things that are non-time sensitive and easily dealt with. And you got to understand, if we've got a purchase sale agreement for a business, it's got to be structured correctly from the very beginning. So anytime I look at a retirement account, I look at two issues. Two issues again, all right? What type of account it is and what they want to do with it, right? And who are they transacting with? And in that situation might be that third component. But we're going to look at it and say, okay, where's the money? What's the source of funds, and what do they want to do with it? And what's important to understand is that we can combine, let's say, Roth IRA money and traditional IRA money. We can take traditional, just a SEP and a regular, even a beneficiary IRA, one that's been inherited. We can combine all of those into a common investment, but it's going to be more complicated because each of those different accounts requires a different type of custodial account. And then if we're going to combine each of those accounts, all those accounts are actually considered disqualified parties to one another. So normally I say, okay, when somebody asks me whether they can do something, I'm going to say, okay, what do you want to buy and who are you transacting between or for the benefit of? And you can literally buy anything other than collectibles, life insurance contracts, or stock in a sub-S corporation with an IRA. You can buy anything other than collectibles with a 401k plan. So it's really wide open with respect to investment. What causes problems is transactions between or for the benefit of a disqualified party. Who's a disqualified party to you or your retirement account? Well, lineal ascendants, descendants, their spouses, or any legal entity owned and controlling interest by one of those. So that's sort of my two things. What are they buying? Who are they transacting between or for the benefit of? Now, if we're taking, like I just said, a traditional IRA is going to be a disqualified party to a Roth IRA, which is a disqualified party to a beneficiary IRA, which is one that's been inherited. We can still combine those three things together into a common investment. That's fine. Back to the conversation that I started with. Okay, I don't know anything at this point with respect. They sent an email wanting a phone call. So I sent an email back saying, okay, look, I'm happy to do the phone call. This is what I'm going to want to know. I'm going to want to know the source of account, what type of accounts they are, the sources, if it's just one or if it's multiple. I'm going to want to know whether they're working in it or just making that investment. If they're just going to make the investment, as I said, they have a choice of a basic self-directed IRA or a checkbook IRA, or we call it the Checkbook Advantage IRA, and that's our company's term for it, and it's copyrighted. So we've got a situation where a basic account means that the trust company for benefit of your IRA is going to be the ultimate owner of that asset. A checkbook IRA, IRA LLC, or the Checkbook Advantage IRA LLC is going to mean that we're going to stick an IRA-specific limited liability company between the trust company and the ultimate investment. So the trust company makes an investment into the LLC, which the taxpayer is the manager of. The member of that entity is the trust company for benefit of your IRA. You would be the manager of it, so you're just negotiating to purchase that business in the LLC's name, and you as manager have the ability the power of the pen to get it done. That takes care of a mere investment. Now, if you want to work in the property, that structure is not going to allow it, period. Okay, that would, if you work in any way in that business, that's a prohibited transaction, which blows up the accounts involved with that transaction. So keep in mind, IRAs, you do not want to commit a prohibited transaction. Committing a prohibited transaction means all funds in the account are considered dispersed as of the first day in the year in which the indiscretion occurred. So it's really not something you want to mess with. If the person wants to work in the property or work on that investment in that business, then we're going to do a rollover business startup. So instead of a combination of an IRA and LLC, we're going to combine a 401k plan and a C corporation. So we're going to take the source of money, whatever these IRAs are, and keep in mind we cannot roll a beneficiary IRA, once again one that's been inherited, nor can we roll a Roth IRA into a 401k plan. And the other types we can roll in that new 401k plan. So instead of an IRA and a trust company, we're now creating that 401k plan. We're going to move the money to the 401k plan. Instead of using an LLC, we're going to use a C Corp. The plan buys the Corp. The Corp makes the investment in the business. And now you can literally work for that corporation that is owned by your retirement account. Now, we do require our clients to have a 5% share in that corporation as well. But you can just see in that transaction, if I get the inquiry, it's like, can I buy ABC Corporation? Yes. Are you going to work in it? Or is it just mere investment? If you're going to just invest in it, we could use a 401k, we could use a basic IRA, we could use the Checkbook IRA LLC. If you want to work in it, then we're looking at doing that Rollover Business Startup, or ROBS, and that's going to mean we're going to migrate the funds into the new plan. The plan buys the Corp makes the investment, and there you go. Either way, it can be handled, and we're happy to help you out. And the best course forward is to give us a call. Talk to us, ask the questions, and we're going to go through all the pluses and minuses of everything and get you where you want to go. So thank you for coming to join us today. David Moore, IRA Advantage, IRAadvantage.com, and I look forward to talking to you soon. Bye-bye.